Hello, this is Jordan, and this is your precious metals video market update. This is being recorded on the late evening of Saturday, June 22nd, 2019. Thank you so much for joining me today. And in this video, I'm going to provide an update on gold and the gold stocks. So starting off, let's talk about fundamentals. And if you've been following my work and seeing the last couple videos and various articles that I've been writing in recent months, I've been talking about the need for the Fed to change its policy, and after shifting its policy, cutting rates. And I've basically been saying, we're going, the precious metals market is going to move when the Fed starts a new rate cut cycle. And it looks like that's coming to pass. I mean, the Fed basically intimated that or at least the market thinks it's a done deal, that they're going to cut rates at the next meeting in June, or in July. That probably won't be the only cut. And based on the history that I've studied, as you can see here, I have the statistic there in this video. In 11 of the 13 past rate cut cycles, the gold stocks have done especially well. I don't have all the stats in front of me, but I think the median gain, if you just go back 60 years, I think the median gain is over 100%. There you see the average gain. The minimum gain, I think I want to say, is 50 or 60%. So there's really a good chance there that we're going to see a significant rise just based on this history, and that's not even looking at the other things. So that's why gold is broken out. That's why the miners are really moving. Real interest rates are going to be declining. The market knows that. So now we have the fundamentals. They're in place for a bullish move. Those weren't in place in the last couple years. So now let's get into the technicals. And in this chart, we're looking at gold against foreign currencies, and then the COT. Now at the top is the COT, in the middle is gold, and then at the bottom is gold against foreign currencies. I'll start with the COT. Now, as you know, or you may or may not know, I measure the COT as a ratio or a percentage. It's the net spec positions, so all the non-commercial positioning divided by open interest. So that gives a nice, clear ratio over time. It makes it easy to compare. And there's a couple points I want to make about the COT, or a couple insights. First, we're at 42.6% to be specific, and that is as of the end of last Tuesday when the gold price closed, I think, at $13.50. So in real time, we're probably, if I had to guess, we're probably 48, 49% right now. And if you look at the peaks in the COT around the 2011, 2012, and 2016 peaks in the gold price were about 55 or 56%. So we're not quite that high. However, if you go back and you look at times when gold had significant breakouts in the past, and especially looking at 2009 and the second half of 2005, you can see the vertical lines there. You can see that there are points where the positioning was already extreme right before the market broke out, or as the market was breaking out. So and this is probably also true in other markets, other asset classes. When a market makes a significant breakout, the extreme bullish sentiment that might accompany that breakout, you have to be careful about being a contrarian at that point and just going, betting against the extreme bullish sentiment. Because as we've seen here in the past with gold, there were points when sentiment reached an extreme. I mean, look what happened in early 2009 or early 2005, or the middle of 2005 or the end of 2005. I mean, you can see that the net spec position was over 50%, yet the market still made a huge move higher. So I'm not really worried about the COT as something that's going to stop this move. I don't. That doesn't worry me. Especially as long as gold holds its breakout. Now, the one thing I want to point out with respect to gold against foreign currencies is, well, there's actually two things. First, that index, and another way to look at gold against foreign currencies is gold multiplied by the dollar. So we're looking at how is gold performing, and we're excluding the effect of a weak dollar. And if you look at that, that chart is only 6.5% from the all-time high, which was actually in late 2012. So it's probably 6% or 5.8% if we're just going to the 2011 high. So, I mean, a 6.5% move in gold would take it to almost 1,500 or the upper 1,400. So that just shows you how much stronger gold is right now against foreign currencies. And this is against the euro, the yen, that basket. We're not plotting it against really weak emerging market currencies. This is charting it against the euro, yen, the pound, the Canadian dollar, etc. So gold is much stronger against the major currencies than it is in U.S. dollars. And so to the same point, just look what happened. If you look at gold against foreign currencies in 2017 and 2018, when gold tested its resistance a couple times, gold against foreign currencies was really weak. So there was kind of a negative divergence there. Now we see the opposite, where gold has broken out, of course, in dollars and also in foreign currencies. So that's very constructive. I really hope I mean, it would be great if gold continues higher to 1,500 and gold against foreign currencies continues up and reaches that 2011, 2012 high. I mean, that would be a very good sign. And the last point I want to make with respect to gold against foreign currencies is the euro and the yen. The dollar looks to be cracking, so the dollar could have a move lower. The euro and the yen look like they've bottomed for the time being. So gold is not, I mean, it's really strong against the other currencies. It's not quite as strong against the euro and the yen. So that'll be something to watch. If the euro and the yen continue to rebound. Again, if gold rises against the euro and yen as they're rebounding against the dollar, that's another really good sign. That's the relative strength you see in bull markets. Now, here we're looking at gold and gold stocks against the stock market. At the top, we have gold against the S&P. Bottom is GDX. And if you follow my work, you know how often I mention how important this is. And how gold performs against the stock market, this is going to tell us how long this move in gold is going to last. Is this just going to be a quick 6 to 12 month move? Because I have seen some people forecasting that. I mean, other people like Paul Tudor Jones have said 12 to 24 months. The timing of how long this move lasts will be determined in large part by how gold performs against the stock market. And just looking at the bottom, that ratio is fairly close to testing its 52-week high, and I would say making a new 52-week high. So I'm not worried about that. The 200-day moving average is now sloping higher. Again, the slope of moving averages is really important. That's sloping higher, so I think that's not a difficult call to see that GDX is probably going to rise above the red line, make a new 52-week high as far as that ratio. Now, gold against the S&P 500, can it get back up to 0.54? Yes, but if you think about it, let's say the S&P goes down a tiny bit, 2,900 times 0.54, that gets you to almost 1,570 gold. So I think if we're going to see gold, go above the 1,500s, it's probably going to have to break above that 0.54 resistance. If gold can break above that line, or I should say if the ratio can break above that line and hold it, then that's a really good signal for gold getting up to 1,700 and possibly higher. So, gold can still do really well here and make a run, even if that ratio doesn't strengthen all that much. But again, this ratio, especially at the top, that's going to be a leading indicator for how far this move goes. And lastly, I wanted to mention it in the last slide, but 1,700, that's the measured upside target for gold based on this bottoming pattern that developed over the last 6 or 7 years. The initial resistance, there's a little bit now in the low 1400s. I think this is a weekly bar chart, but on the daily chart, there's resistance for gold at 1420. So that's something to keep an eye on this next week. Also, the quarterly, at the end of this week, we have the monthly and the quarterly close. So it's very important, the close coming up this Friday, that gold holds most of these gains. Even if it closes at 1360 or 1370 this week, I mean, that would be fine. The quarterly resistance is at 1330, but that's not what we want to see. We don't want to see gold run up to 1420 and then it sells off to the, back down to 1330. That would kind of be disappointing. So hopefully gold holds these gains, and monthly resistance and monthly resistance is at 1330, and then there's some at 1360. Quarterly resistance is at 1330. So those are the two levels to watch as gold closes the week, month, and quarter. So if gold is able to reach 1700, the measured upside target, then the potential measured upside targets for first GDX is about 50, and for GDXJ is about 83. So there you go. I mean, that's the potential. If this market is going to make a major move over the next 6 to 12 months, and there are people saying, it could make a really big move quickly, gold gets to that 1700 level, I think there's a good chance you could see GDX, which is at 25, get to 50. That's a double. GDXJ, which is at 34, get to 83. That's roughly 150% from here. So there's a lot of potential upside here, and we'll see. I'm given that the dollar is cracking and looks like it's breaking down, and that the Fed is going to be cutting rates, I'm optimistic, and I think we are going to see this market continue to move over the months ahead. But this next week, let's watch, because if we see a dip to 1360 or 1370, that could be a buying opportunity. And again, watch the close at the end of the week. That's all for today. You can check out my work at thedailygold.com, and I just put out the PDF form of my new book. Go to thedailygold.com, opt in there at the top, and you'll immediately get my book. It's over 100 pages, over 50 charts. It's extremely actionable. It's going to help you understand gold, how to pick a junior mining company, etc. I have my long-term outlook for gold, what's going to happen in the next decade. When might gold and silver peak? When is this whole mess that we're in? When is it really going to reach a crescendo? I talk about that in the book. But aside from the book, you can also consider subscribing to my newsletter. It's $149, only 6 months. Go to thedailygold.com/premium. We focus on market timing and stock selection. We try to get into the best stocks at the right time, and we use a disciplined approach in trimming positions and cutting losers. And I think there's some great opportunities out there right now in individual names. Obviously, not quite as good as a week or two ago, because some things have really moved in the last couple weeks. But look, if we get this snapback to 1360 or 1370, that could be your chance to get in if you're already not in on this. That's all for this video. Again, I thank you so much for joining me, watching this video, and I look forward to publishing another one in the days and weeks ahead.